this is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past few days. A couple of things really to touch on. First, the news from the United States that the President and the First Lady have tested positive for coronavirus. And the question here is, how does that impact financial markets? There's really three things to consider, we think. The first is around sentiment. And the knee-jerk reaction is for sentiment to take a hit. Uncertainty around US politics and policy is already very high. If we look at forward measures of volatility around the election, we see a spike, and that spike continues into December and January, suggesting that markets are at least considering the possibility of a disputed election and a prolonged period of uncertainty. The second is around economic activity. Will this news prompt US population or some parts of it to change their behavior in some way? Perhaps a little on the margin. But if you weren't taking coronavirus that seriously before, will this news force you to reevaluate? Perhaps, but maybe not that much. And the third is really around policy, and specifically around the fiscal stimulus package. Republicans and Democrats have been struggling in recent weeks to come to an agreement on this. And we have seen some progress, however, over the past few days. And this news perhaps will encourage both sides to push forward for an agreement. So when you think about the overall picture, uncertainty does increase, although from a political perspective it's already at a very high level. There's perhaps a little bit of risk to the trajectory of the economic recovery, but on the margin. And then perhaps on a more positive note, the potential for some movement or some faster movement on the stimulus package is something that we think markets would take positively if that's what we saw. On a less dramatic note, we've seen some commentary around monetary policy in the Eurozone this week. Christine Lagarde from the ECB commented the ECB would be looking at changing its policy framework, perhaps more in line with what the US Federal Reserve has announced. Even if that does prove to be the case, the time frame is quite long. The ECB review of its policy framework is only due to be completed in September of next year. And some members of the Bundesbank have already come out and said that they wouldn't be in favor of a significant shift in the policy framework. So when we think about the possibility of the ECB to take a more easy stance or a more tolerant stance of marginally higher levels of inflation, it seems less likely that it'll happen, and if it does, it'll be sometime in the future. Thank you very much for joining us, and look forward to speaking to you again soon.